This is the secret strategy that top traders use to dominate the markets. With just a few simple steps, I'm going to show you guys how to increase the accuracy in finding high probability trades. Grab your notebooks and you begin to learn. In this video, I'll break down an insanely powerful trading strategy that combines multiple confluences. I integrate market structure shift, a fair value gap, Fibonacci. We always start with the higher time frame analysis. Why? Because the higher time frame gives us the overall trend direction. It also shows us where the wicks are, where the real move is. So if the higher time frame is bullish, we are looking for buys. If it's bearish, we're looking for sells. Give you guys an example of what I mean by that. So right now, if you go to the daily time frame, right now, since we are at the daily time frame, you can see that the market has been bullish. The market has been buying the past 3 months or something. So it means in this whole period, I was looking for buys. I was not looking for sells. So after we go to our higher time frame, we now go to lower time frames like the H4, H1, and that's when we look for entries. So in today's video, I'll be showing you guys how I get these entries. So this is also an entry that I would have taken. This one right here. An entry would have taken. So I want to show you guys how we actually now take these entries and how we capitalize on these entries. You see that over the course of maybe 10 days, we would have gotten many good entries. So once we have the trend, we drop to the lower time frame. We look for our entries, but we just don't jump in. We wait for the market structure shift. So I'll just look for a market structure shift for you guys. So it's almost like this recent price action right here. It's almost like this recent price action here. We can see that before we look for an entry, we had to go to a lower time frame to look for a market structure shift. So if you don't know what a market structure shift is, in the Telegram group, there is a PDF. If you go to the pin message in the Telegram, I want you guys to go to page 27. And on page 27, that's when we start talking about the market structure shift. So you guys can just go check what the market structure shift is. And then I want you guys to compare this textbook market structure shift to what the market is actually giving us. I also gave examples in the book. So make sure that you go check it out. The link to the Telegram is going to be in the description. If you guys can just take a closer look, the market was making lower lows and lower highs, and then we broke them right here. So this is our market structure shift, right? So after we do our market structure shift, we're now waiting for the market to retrace. And how do we find those entries? We draw our fib from the low that we made, which is right here, to the high, and the market will actually come back to give us an entry. When we tap this yellow line, that's our entry zone. So between this yellow line and this red zone, that's our entry zone. So you see the market actually came back to tap the yellow line, and our take profit is literally at 1:4. So if you want to have consistency in your trading, you can just have a consistent 1:4 trading, and boom, would have made a profit on that. So I could give you guys more and more examples on how this works. So if you check this out again, this is a market structure shift. The market was going higher, but at a certain point, we displaced lower, and after with the displacement lower, we left a fair value gap behind. And if we take our 2 again, our Fibonacci 2, we draw from this high that we made over here to this low. You can see how the market actually came back to tap that yellow zone again, and now the market is going lower. So right now I actually expect the market to even push lower all the way to this zone. So this is the setup that the market is currently trading in right now. Step is after the market has given us a market structure shift, we wait for a fair value gap. So we could either use the fib or a fair value gap, or you could use both. So in this case, this is our fair value gap that the market trades into. If we can go to all the other examples that I have given, you see that the market will always trace into a fair value gap. So for example, in this scenario, you actually see that we have this fair value gap over here. If you go to the higher time frame, you actually see the fair value gap more clearly. Take a look at this, how we have this fair value gap right here. Starting over there, and it's retracing all the way down here, and you can see how the market traded into that fair value gap. And in this scenario again, you can see how the market traded into this fair value gap right here. We have a fair value gap inside here. So this could have been an entry again over here. We could have had an entry over here. And if you guys can just take a look, the market is always trading into this fair value gaps. For example, look at this, traded into that. Right, pretty much all our entries we are trading down into a fair value gap. Even if we go back in price, you see that we got all these setups using this simple strategy, this simple tool. You can backtest it any way you want. You can backtest it, and then I just want to show you guys another example. I've been giving you guys bullish examples since we've been bullish, but I also want to be able to give you guys a bearish example when we also had the market turning bearish. So I want you guys to just look at this price action where the market structure shift right here. And after we had our market structure shift, what did we leave behind? We left behind a fair value gap. And this is the fair value gap that we're looking at right here. And after we left this fair value gap, we can now even use our Fib 2 to draw from high to the low to determine where the market would trade into. And remember guys, we're still aiming for 1:4. So we'd have our entry at this yellow line over here, and would have our stop loss right above this zone, and we'd have our take profit at 1:4. So you'd see that by the time the market got here, would have already had our take profit hit. So stop loss at 1, take profit at 1:4. This is a bearish example of what I'm talking about. And I could give you guys more and more examples of this on how this works, but it's basically pure price action, just knowing how to read price, and you can just make money through that. So I'll give you guys another example for market structure shift. You see that we're going lower, then we're still going lower, then we broke. It was an aggressive price movement when we broke. So this is the market structure shift right here. So to find an entry, what do? We draw our Fib from low to the high, and after we do that, you will see that the market actually traded back into our entry zone right here, and our stop loss is at this low, and our take profit is at 1:4. So this would have been our take profit. Okay, so our take profit would have been there. And we go on and on and on about how this strategy works, on how the setup works. So even on the bearish setup, I'll just give you guys another market structure shift. You see we have a market structure shift over here. After having a market structure shift, did the market trace into a fair value gap? Yes, it did. So sometimes you could use the Fib, sometimes you could just see if we trade the fair value gap. So at the 50% of the fair value gap, you'd actually enter the market. So let's say with our entry somewhere here, somewhere in this one. And our stop loss and our take profits, it's at 1:4. There we go. Would have actually hit our take profit with the setup over here. And another example that I could just give you guys, I could spend the whole day giving you guys an example. With the market structure shift, we're going lower. So let me just explain the market structure shift to you guys more. We're going lower, then high, then low, then high, then low. Then we broke those lows going higher. So now we wait for retracement into a fair value gap or into our OTE, optimal trade entry. So that's when we draw our Fib from low to the high. And I want you guys to notice that sometimes we'll actually trade into the 50% equilibrium level, and if you see a rejection in that level, then we can take an entry from that level. So in this scenario, we're going to be taking an entry from here, and our stop loss was going to be at this low, and our take profit was still going to be 1:4, which is around here. It was going to be 1:4, something like this. I could literally go on and on showing you guys the accuracy in these trades. It's so accurate. Another example with the market structure shift right here. After having our market structure shift, we draw our fib from high to low. We get our entry either at the 50% or at the optimal trade entry. Sometimes I like the 50%. It just depends on the conditions. Is the news coming up or what? And then we have our stop loss there, and our take profit is the 1:4. So this would have been our trade. So daily you can actually be consistently profitable just using this simple strategy. We've been talking about you trading into the lower time frames, you going into the lower time frames. So if you guys can, so in this scenario, if you guys go into the lower time frame in this zone, if you guys go to the lower time frame in that zone, you actually see that we have an entry in there. But I don't want to go to the lower time frame right now since I'm able to come back to this price point. Anyway, another market structure shift. We broke this over here. Then after we broke it, that's our market structure shift. What do? We draw our fib from high to the low. From high to the low. So that means that we're only, if you wait for the 50%, you'd have been in over there. But if you wait for that OTE zone, this yellow line, you would have been tapped in here. And our stop loss is just about this high. And our take profit is at 1:4. So this would have been a trade that you'd be looking at. Something like this. Okay. 1:4. This works everywhere. Every time frame you can actually think about this strategy works. So I just want you guys to also go into your charts, and I want you guys to backtest these concepts. So this is basically ICT market structure shift concept. We now have confluences, so it's high time frame bias. So if you are bullish on the high time frame, we're only looking for buys. We're only looking for bullish market structure shifts after a liquidity swap. So I'll get more into everything in the mentorship. Join the Telegram group and you send me a message and I'll plug you to the mentorship, right? So once all the confluences align, execute the trade. But remember, risk management is key. Always use proper stop losses and take profits based on structure. So I'll just with you guys through the checklist again. So what are we looking for in price? So the first thing that we're looking at, we go to the higher time frame. So let's say this is the higher time frame and we see the market is actually doing something like this. The higher time frame is bullish. Then now what do we wait for? We wait for retracement. So how do we find these retracements? If the higher time is bullish, it means that at a certain point in time, it's going to want what? To retrace. So when you see the market actually now retracing into this zone, that's when we now zoom in to this zone. And when we zoom into this zone, what are we looking for? We're looking for a fair value gap. Once we have our fair value gap, what are we waiting for? We're waiting for the market to create a structure. So it's been going lower, right? And it's been making, on the lower time frame, it will look something like this. We're waiting for the market to break above the recent highs it will be making. And then in this zone, we also wait for fair value gap, or we use our OTE. That's when we come and draw our OTE from the low to the high. And when the market comes back into our entry zone, whether it's a fair value gap or is this the entry zone, that's when you get in. And what's our rule? We're aiming for 1:4. So now you actually now adjust your fib to go to around 1:4, and boom, you have a setup. So it's just that simple. Identify the daily bias. That's number one. After identifying the daily bias, identify your points of interest. Where is the market most likely going to retrace to before we continue higher? And when the market retraces that zone, that's when we now look for this setup. That's when you now wait for the market structure shift. After the market structure shift happens, that's when you use your fib 2 or you wait for your fair value gap. And when market trades back to your fair value gap, that's when you put your stop loss on the low that we just made and you aim for 1:4. And that's literally everything. So if you guys, if I could just give you guys an example. Okay, so let's just use this. Let's look. Okay, so this is the last bullish setup that we had before we went higher, and I'll just show you guys how what we're talking about. I'll just go to my lower time frames because we usually get our entries in these low time frames. So if you want to have very sniper entries, what do you actually wait for? You wait for the market. So as you guys can see in this one, the market was tracing lower and lower. And where was the market going? We're going for these fair value gaps down here, right? And we also swept this liquidity down here. So now when we saw that now we just had a market structure shift, we're now going higher. It's happened in this scenario where we actually closed above this high. So we're making lower high, lower low, lower high, lower low, lower high, lower low, and then we broke structure here, making a higher high. So now that's when we wait for retracement down here into our OTE zone, and now we wait for the market to trade higher, as happened in this case over here. So it's literally simple to identify these types of movements. It's not so complicated. Make sure that you subscribe to the Telegram group and you tell me if you guys are getting value from this. If you guys can just also take a look at the Telegram group, I explain this whole market strategy concept in detail. So make sure that you join and you go to the file section and you see this PDF. We are literally talking about the same thing where we have a liquidity sweep. We are trading higher with our market structure shift, and the market traces into a fair value gap before the market continues to drop. Same thing that we have here, market structure shift, the market trades into a fair value gap, then it continues to drop. I also even have a trading psychology section in my Telegram group, so you guys can just also go through that. There's also a checklist for a trading plan. If you're a beginner and you don't have a trading plan yet, make sure you also check out that section, because having the strategy is just a simple piece to the big puzzle. You need to have a trading plan, you need to know what you're doing, and this is the model that we're using so far. So make sure that you guys are subscribed and you guys are logged in and you're following the trades. So I'll also go through some of the trades that I've taken in the Telegram group so far. So if you look at this trade, you guys will actually see what I'm talking about. We're literally going higher, then with the market structure shift, then look at the market and look at what it did. The market actually traded into our fair value gap and it dropped, literally giving us a full take profit. Look at this trade again. The market was going lower, with the market structure shift, we traded back into a fair value gap, and now the market is going higher. And look at what the market did. It actually ended up hitting the full take profit. This is another trade setup that I would like to show you guys. We're going higher, and now we are retracing into a zone so that we continue going higher. And look at the market did. We actually retraced into our zone, and now the market is trading higher. Just look at the market hitting the full take profit. So these are the concepts that I want you guys to learn. These are the concepts that I want you guys to also master. The example that we have here, if you go to the lower time frame, you see that where the market structure shift. So I was waiting for the market to retrace into fair value gap, and in this scenario, look, we retraced into the fair value gap, and the market actually tapped our zone and we started going higher. And in no time, look at the market, it's pushing higher and it's going for the full take profit. So it's concepts like this that we actually trade with. Another example, that's the same trade. You see it actually went for the full take profit, and that was more than 200 pips. It's not so complicated once you just master the skill. Another example, this is the trade that we're looking at on that particular day. You see that the market traded into that fair value gap, and after the market traded into the fair value gap, it just went straight to TB. And I do this consistently in the Telegram group. Another example is this one. We're going lower, then we had this market structure shift right in this one. So now I send the signal, we tapped in, and there we go. Profits, we'll take profit hits. This is another one right here. We're waiting for the market to trade into our zone. We're sweeping that liquidity and we're now getting our entry. So I just want you guys to see how market is respecting our zones. How we actually end up just having full take profits on this setup. So this setup actually giving us the full take profit. So in the Telegram group, you can also consistently do this. I could go on and on giving you guys examples of the times that we actually had good entries in the market. What's important is learning the skill and making sure that you master the skill. So for now, I want you to go back test. Send me a message on Telegram if you have any question. If you want to join the mentorship, send me a message on Telegram. The link is in the description. Just message me and we'll talk. That's the full breakdown of this powerful strategy. If you found value in this video, hit the like button and subscribe for more high value trading content. Also, drop a comment below if you have any questions or if you want me to break down any other strategies. So a lot of you guys have been asking me to do a trade breakdown on EUR/USD. So with EUR/USD, what I love to do is I first love to look at DXY, and then after I look at DXY, then now I'll know what's the direction of EUR/USD. So I love to start on the weekly time frame to just have a grasp of what's actually happening in the market. So if you guys can see, I was actually bullish with DXY the whole time. I actually caught this whole move as DXY was going up. Is waiting for it to break this high from April. There we go. So right now, what's happening with DXY? This possibility that we could continue higher. We could continue all the way to this one. So when DXY is bullish, it means EUR/USD is bearish, right? So it's possible we can continue all the way to that zone, or if we actually go to a lower time frame, we'll see that no, maybe we're reversing, since we're also in this favor look at right here, and that could also mean that right now we're actually looking at something like this, right? So now the lower time frame will actually answer all the questions that we have. So I'll just go back to the daily time frame and I'll try to see what's the structure that we're getting from DXY. So from the daily time frame, I'm actually seeing that DXY had the market structure shift over here, and after having the market structure shift in going lower, so that means that so for now, the most obvious zone that we are looking at when you're going lower is this one right here. This is our liquidity grab. This is where the market is most likely going to push to before we can actually even so our liquidity sweep on the daily time frame is this low over here. So it's possible we do this then continue higher. So for now we are looking for DXY to go lower, and that means we're looking for EUR/USD to go higher. And today is the 3rd of March. So just yeah. So we now go into the 4-hour time frame to see what's happening there. And if you go to the 4-hour time frame, we can actually see that we had a displacement higher. So now we just wait and see. But from the structure that I'm seeing from the lower time frame, it's possible that we still have a continuation. So from the lower time frame, I'm looking at something like this before we even go higher. Then we'll come back to that zone down there later. So for now, I'm actually looking at something like this before we can come back to sweep this low. Then we finally have the big move upwards. Yeah, so this is our analysis so far on DXY. You guys share with me below what you think, and if you have any other pairs that you want me to analyze for you. So now we go to EUR/USD. So now knowing that DXY is supposed to sell then go higher, it means that on EUR/USD we are also looking at the inverse, which will be something like this before we can actually go lower to sweep this zone over here, or even lower. So this is our analysis on EUR/USD. So I'll just delete drawings. Yeah, so that's what we are looking at. So I'll just update you guys on what I'm thinking. But so far this is a setup that we have on EUR/USD. I'm expecting it to trade higher before it can start trading lower, and it's possible we actually trade all the way to the zone. So you guys stay tuned, and I'll update you guys soon on where the market is, because we want to see it sweeping this zone down here. So this is our Euro USD setup right now, and it's only exclusive to you guys who actually made it this far. So I'll catch you guys in the next one. For now, peace.